So I was not planning on doing another update. I was not planning on doing this show. I was planning on doing other shows. I was planning on either talking about all the craziness with the gold price manipulation and the story that Turd Ferguson released in the last week or so about how the lawyers from the CFTC left and now they're defending the manipulators, or about the large US banks, how they're trying to extend and grow the real estate bubble here in the US. But this update just came out. So the Federal Reserve just updated their balance sheet, even though I did the show yesterday. And on the Fed's website, now things are going even crazier. So we just got another update on the Fed's official balance sheet. And now I put on there, if you could see the chart, the balance sheet has gone from the end of August. It was at it got to the lows at 3.7, let me pull up the chart here, $3.759946 billion. That was the absolute lowest the Fed's balance sheet got to with quantitative tightening, balance sheet reduction. The total balance sheet only got down about 17% before the Fed panicked and had to reverse. So the balance sheet got down to 17%, about 17% total. That's all that they could sell off. And now, guys, in less than 5 weeks, the balance sheet, the Fed's official balance sheet that was ended yesterday, released today, because I checked yesterday when I did the live stream show and it wasn't updated. But as of October 2nd, which was released today, because I guess they finished the numbers after market close yesterday, the Fed has now increased their official balance sheet almost $200 billion in barely 5 weeks. That is enormous. Absolutely enormous. And so they're telling us that this repo madness is only temporary. It's only overnight lending, no big deal. And yet the St. Louis Federal Reserve predicted that there was going to be repo problems back in March. They actually were right about that. There would be repo problems back in March. Might be one of the only times someone at the Fed was actually right about something. The Fed's balance sheet, guys, the exact number the Fed's balance sheet is up is $185.885 billion. So you round up $186 billion, but almost $200 billion in 5 weeks. In less than 5 weeks. Since the end of August, it is up almost $200 billion. Freaking insane. So what is the Fed buying? You know, the question then, as I discussed yesterday on the live stream show, is what the Fed's buying. Are they stepping in at treasury auctions? Are they actually not buying good collateral stuff? Because the claim for these overnight repos is that they only take quote unquote good collateral. But the reality of the situation is, in past financial crises, if you look back on the charts of repos, the amount of repos in a month can go crazy. It's gone up fourfold from 100. Repo is a repurchase agreement, or repos are a normal part of the banking system now. However, in good times, they will only be around $100 billion per month or less, and then the Fed is only accepting good collateral, which is treasuries. In bad times, the amount of repos in a month can go up threefold, fourfold, sometimes even more than that. And then those are the red flags from past financial crises. If you go back and look on a long-term chart of the repo market, it's right around 2001 when the repo amount went from below $100 billion per month up to over $400 billion per month. And in 2007 and 2008, when the Fed was buying mortgage-backed securities and other toxic garbage from the banks, which was not quote-unquote good collateral. Dirty bubble rising. One man's quote-unquote good collateral is another man's toxic sausage. Oh, I love it. I absolutely love it. I agree. Yep. One man's trash is another man's treasure. So they're telling us that it's good collateral. They're telling us that they only take U.S. treasuries. But I told you, officially, primary dealers only have $300 billion in treasuries. Now, they may have a lot more than that in the hold-to-maturity counts that Victor Sperandio has talked about. The other thing here that I think is of importance in the short little update for the show is that the Federal Reserve's next official meeting on their calendar is October 29th and 30th. So it looks like, guys, with the way the Federal Reserve's balance sheet might go, and this is important, this was mentioned in the Real Vision television interview behind the paywall between Danielle DiMartino Booth and George Goncalves, who both worked at the Dallas Federal Reserve. And that interview is well worth the subscription. There's other great content on there as well. I think it's down to $180 for a year subscription to Real Vision television. It used to be like over $600. So they're offering you more content at a lower price. Anyways, they were discussing how if things got worse and the balance sheet had to keep expanding, and they made it sound like there was an eventuality that there would be a permanent repo facility having to be implemented, but they made it like it might not even the Fed might not even have to be able to wait until the next Fed meeting at the end of October. So they made it like the Fed may have to do, and this was discussed in the interview if you watched it. They talked about secret Fed meetings that the public might not know about, and how there could be secret Fed meetings and then an emergency announcement about a permanent repo facility before the next Fed meeting. So we might get that. This is a big red flag, how the Federal Reserve's balance sheet is up this much in less than 5 weeks without an official quantitative easing announcement. So the question is, what are they buying? And the answer is, we don't know. We're not going to find, we may never know the truth about what they're actually buying. They may issue a press release and say what they're buying, but we won't know for sure without any type of independent, transparent audits, which the Fed does not want. Oh, the Real Vision TV was on special for $155. Oh, that's a good deal. Yeah, Audible's also great. That's another great learning tool. I buy audiobooks on there. They have specials for subscribers all the time for Audible. Yeah, Real Vision television subscription, an Audible subscription, and then hopefully you're a Patreon to my podcast and you're going to learn a lot. I think Hedgeye is also good, and they release a lot of great stuff for free, but I think the stuff on their paywall is a lot more expensive than Real Vision. Hedgeye is good, though. I like Hedgeye. Their free stuff is excellent, but I haven't... They release stuff, I think, later that's behind their paywall. You have to look, though, on the stuff that's behind the paywall, and then they release it. You have to see when it was recorded. Because Real Vision Television lately has been releasing interviews that are 8 months or a year old. So you have to see if it's how old the... You have to look in the information and description section to see if the interview is that old. And the gold price is reacting to this news. The gold price is solid, above 1,500. So all the mainstream media, mainstream financial media articles that the gold price is about to crash, I think the gold market's understanding that the Fed is panicking. The Fed's screwing up again. Might have to have an emergency Fed meeting. Might have already occurred. We wouldn't know unless it got leaked to a journalist or someone leaked it to someone else and we found out that way. I'm not familiar with Danielle's paid newsletter. I haven't looked at the price. I mean, she does so many public interviews, you get a good amount of it, but she tracks a lot of information on her daily newsletter. So I just wanted to do this update. That is an insane increase in only a month. To put that in perspective, let me pull up Peter Schiff's tweet. He was saying that this is more than a lot of QE programs. So let me just pull up, let me read you his tweet about this. If my computer will load. I have too many windows open. Let me close some windows and see if this fixes. Dollar index is below 99, so the dollar index is probably reacting to some of this. That just saw the Fed balance sheet update saying, my God, why is it up so much in such a short amount of time? Dollar index is below 99. We'll see if it ends up above 99 again, but it's still holding above 98. The dollar index had really struggled for a long time to stay above 98. It seems to want to stay above 98 though, so we'll see. Mark says how is the dollar crashing? Mark. All these other governments are all doing the same dumb stuff. All these fiat currencies suck. All these governments, big governments suck. Okay, this is why you don't look up a website while you're doing a live stream show. It's not loading. Okay, let me see if I could get the tweet up. I wasn't even thinking about reading his tweet. Okay, it looks like I may get it to load now. Oh, I think I just did. Okay, here we go. So it actually worked on the second try. Okay, so he put this out an hour ago. Quote from Peter Schiff. The Fed claims it's not doing QE, but last week its balance sheet expanded by $88.1 billion. It's grown by $176 billion in the past 3 weeks. And I would add in the last less than 5 weeks, it's up even more than that. It's up, the number that I said here was $185.885 billion in less than 5 weeks. During QE3, at most, the Fed's balance sheet grew by $85 billion per month. So the Fed is buying more than twice as much debt when it's not doing QE than when it was. Actually, we don't know what the Fed's buying. The Fed has not disclosed that they're buying treasuries. The Fed could be buying collateralized loan obligations because those things could be blowing up. So without an audit, we don't know exactly what the Fed is buying. But it is a good tweet, and it does put things into perspective that this is, if this trend holds and the Fed purchasing continues at this amount or similar amounts on a monthly basis going forward, the Fed is unofficially doing QE without announcing it publicly. This is a good question here from Shaka Zulu. What do you think they'll do first to devalue the dollar? Well, they're saving the main devaluation strategy for last. I call it the nuclear option, the quote-unquote nuclear option, and that's devaluing the dollar against gold. That's what FDR did in 1934 because nothing else worked, and the central bankers and academics hate gold, so they don't want to do that. So they will save that for last. They will try every other stupid thing first. They will try every other thing twice or more before they devalue against gold. What will they do to devalue the dollar? So the emerging markets are the ones who are getting absolutely killed with the strong dollar now. The higher the dollar stays and the stronger it gets, the more it hurts emerging markets, especially with a bear market in a lot of these base metals, commodity prices. Base metals have come under a lot of pressure. So there's about 4 or 5 major headwinds why emerging markets are in big trouble. And historically, I talked about this, there could be another Plaza Accord. So that was in, 1985? I didn't have the date right a couple days ago. Someone corrected me. It was 1985. So Bob Lighthizer was last the trade advisor to Ronald Reagan. So he's back there. He might do the same thing. The dollar had to be devalued because emerging markets almost collapsed then. And in exchange for lowering the dollar to save emerging markets back then, the U.S. got a lot of trade concessions. So I could see a lot, the U.S. renegotiating a bunch of trade deals too. This dollar strength, this dollar rally is really hurting emerging markets who have way too much dollar-denominated debt. I wouldn't call the Federal Reserve and ask them to bail you out. They only care about the large banks. That's their first and foremost priority. Why do you think they would give out swap lines? They wouldn't give out swap lines for free. So it would probably be the reason the European Union got a bunch of swap lines, trillions of them, during and after 2008 is because the European banks are so connected to American banks. Counterparty risk. I don't think the Chinese government would get swap lines. The Chinese banks would get currency swap lines from the Federal Reserve without. If Trump found out about it, he would be absolutely infuriated. That would be similar to how retirement money for Americans in the military and other American retirement accounts, even Americans who are in favor of the trade war between the U.S. and China, is being redirected to the Chinese government with the global index, the global stock, emerging market stock funds, and the bond funds. and how China moves the state-owned enterprise bonds into those, and then the dollars get redirected to the Chinese government. So even though some Americans may be in favor of the trade war, their retirement dollars that go into emerging markets or global bond fund indexes are going to the Chinese government as bailouts anyway. And Kyle Bass is one of the few people that's trying to stop that now. He was in D.C. for all of last week. Oh, thank you, Greg, for the super chat. I appreciate it. Dynamite asks, what do I expect from Sandstorm Gold's next quarterly earnings? Did you see the press release that Sandstorm Gold put out? They announced a record quarter for Q3. Over $25 million in revenue for the quarter. If you annualize that, this will be their first time that they've had annualized $100 million in revenue for the year. And they have 2 more assets coming online in the next 6 months, approximately. More deals. They're looking at more deals. If I had more money, I'd be buying even more shares on the dips. Not financial advice, just my opinion. I already own a lot of shares, but I'd be buying even more. They already announced a press release, so you need to do more homework, do more research. They put out a press release. There was a record quarter. They absolutely crushed it. This is going to be the first time in company history they produced $100 million in 12 months for revenue. And there's a lot more growth already in the pipeline. No, I don't trade. Oh, okay. You're asking if I'm making money off ads. Yes, I'm making money off ads, but I don't day trade. Hopefully you guys can see the chart okay. It was tough fitting it on there. But the narrative was that repo madness, it was all temporary. They weren't going to add to the balance sheet. And now we're at the point where it's looking almost guaranteed by the next Fed meeting that there's going to be an announcement in October's Fed meeting, as soon as October's Fed meeting, perhaps even sooner, an emergency announcement about a permanent repo facility, and that will continue to expand the balance sheet even more. You identify as a bank and you want repo madness? If only life were that simple. Jim Cramer is a highly paid clown. He makes a lot of money running his act. So yes, he's a clown, but he's a very highly paid clown. Michael says they are buying treasury bonds that the rest of the world doesn't want anymore. Well, foreigners have dumped treasury bonds, but a lot of pension funds, insurance companies, they're buying treasury bonds. They own a lot of it. So I wouldn't say, I think the narrative of the gold community that no one wants treasury bonds is bullshit. There's still a lot of money, that flight capital that's coming into the U.S. Okay, the U.S. still has positive rates compared to everywhere else. The U.S. is not in negative interest rate policy yet. So that's going to attract capital, flight capital, and professional bond fund managers looking for yield. Because the bond fund managers who want to keep their jobs, they can't go to cash. They'll get fired. If they go to too much cash, they'll get fired. They have to buy something. They have to hold their nose and buy something. So that normally means treasuries or U.S. bonds then. I don't care about September's jobs reports and all this. All the short day-to-day stuff doesn't matter to me. It honestly doesn't matter. I don't day trade. It doesn't matter. Why is everyone so short-term oriented about this stuff? All these central banks are trapped. They're rearranging. All these central banks are the Bank of Japan, the European Central Bank, People's Bank of China, Federal Reserve. They're all rearranging deck chairs on the Titanic. A positive jobs number, if you're this is not financial advice, just my opinion, This is just hypothetical. If you're heavily short stuff and then there's a positive jobs number, I mean, it'll cause you pain. But that's why people who are smart, if they're traders, that's why they hedge. And hedge funds don't even hedge anymore. I said this. They make a leverage bets one way. I know very few hedge fund managers that actually hedge. They make leverage bets one way. It's ridiculous. The U.S. has projected over 800 billion. It was 814 billion by the end of this year that they were going to have to borrow, and that was on the low end. I don't know how much of that they've raised already. I haven't looked at the number. The Fed could be taking derivative exposure off the books of banks. The worst derivative stuff I've seen lately is collateralized loan obligations, CLO. These things are the absolute worst. And the insurance companies, pension funds, banks, there's Japanese banks that are holding these CLOs. There's pension funds that are holding these CLOs. There's American insurance companies that are holding these CLOs. These CLOs are really, really bad. They're different degrees of bad. They're subprime mortgage-backed securities bad in many cases. There's the corporate bond equivalent of ninja loans in these CLOs. And some of the stuff shouldn't be rated at all. And I've seen internal documents from the ratings agencies saying these things have no rating. These things are garbage. What should we put in our ratings model for them? And they're signed CC when they shouldn't be rated at all. If that doesn't scare you, you are not paying attention. No, collateralized loan obligations are chopped up junk bonds, corporate bonds. They're covenant light. I've explained this. Go back and look at the archives on my channel. Look up Wall Street derivative CLOs. It's in the search. I did an entire episode on this. I'm not going to take the time to explain it without a super chat. We can just inflate the debt away, problem solved. Well, the politicians think that. I have an entire episode on collateralized loan obligations. I spent about 45 minutes. There's research papers from the Federal Reserve. Fitch even issued a warning earlier this year, another ratings agency. They're really, really bad. There's over $600 billion in direct CLOs, collateralized loan obligations, and there may even be a lot more derivatives attached to them. Okay, well, I think that's it for this short little update here. There's a bunch of questions coming in and no other super chats, so I think that's it for right now. Just a bunch more craziness. If this pace holds on a monthly basis, we are looking at unofficial QE, massive unofficial QE. So Repo Madness, the people who are criticizing me, Repo Madness saying I was jumping to conclusions, I was too early, then why is the Fed balance sheet up almost $200 billion in less than 5 weeks? They're buying something. They're either buying a combination of treasuries because there's not as much demand at a treasury auction, or more likely, in my opinion, they're buying derivatives or collateralized loan obligations. They're buying not so good collateral that they want people to think is good collateral, and they're trying to save banks again. Okay, that's it. Bye for now, everyone.